Good evening, everyone. Namaskar, Sasriyakal, Vanakkam. I welcome you all in our today's session, and that is our second session for residential status. In the last session, we have discussed the provisions, the basic part that how to find out the residential status of a person, in which we have gone through with the provision of partnership firm, company, HUF, and of course the individual. The individual was having most complex provision to ascertain whether that individual is a resident or non-resident. And there was sub-classification also, in which either you could be a resident and ordinary resident, or either you could be a resident and not ordinary resident. So today we will see how your residential status impact the taxability of income. So as I told you in the last class that your residential status will impact your income taxability. So it's very important to find out whether you are a RNOR or ROR or resident or non-resident in other cases. So we will find out the taxability, and as well as we will discuss some special provision that income arises or deemed to arises in India, or income received or deemed to received in India. So a lot of things need to be discussed in today's class. So I welcome each of you who have joined the class. Vishal, good evening. Ram Darshan, good evening. Pooja, good evening. Ram Darshan asking it's compulsory to every day to register. Yes. Abhisha, good evening. Mosam, good evening. Soumya, good evening. Shri Haridas, good evening. Vikrant, Sandeep, good evening. Tej Chauhan is asking, Sir, I am appearing for September 2025 attempt and it's my first attempt. I regularly attended taxation live virtual classes, so I want to know how long will it take to complete the taxation courses on live virtual classes by ICAI, and I want to know how much time we'll have for preparation after completion the course on live virtual classes. So Mr. Tej, kindly send an email to the BOS. They will definitely give you the answer of that schedule which has been formed for taxation other chapter classes. So I do not have any idea that what would be the schedule time to complete the lecture, but I guess that might be completed till the end of April. So please, you can mail to BOS regarding this clarification. Deepika, good evening, of course. So in the last class, we have discussed the provisions of how a in-person would be identified as resident or non-resident, etc. So as I also asked in the last class that there would be a recap before starting our today's class. So any one of you who is interested to brief in short that what we have discussed till now in this chapter, residential status, in our last session. So anyone wants to give us small or short recap regarding that? Priya, good evening. Smriti, Bhumika, Rihana, Ram Darshan, Ikbaram, Deepika, Ishan Bisht. Ishan Bisht is asking, good evening, sir. I would like to ask that since the rate under default tax regime have been changed, so why rebate for default is still 25,000? What has been changed, Ishan? I do not understand your question. No change. The 12 lakh rupees benefit would be for next assessment year, not is for your assessment year. So rebate would be 25,000 same. I guess you did not attend the basic concept classes. The 3 sessions of basic concept classes, we have discussed each and everything in detail. So please go and watch these classes first, so your jo confusion hai, that could be clear. Lalit is asking, today is our last lecture in this timetable. What will be the next? No, I guess there would be one more lecture day after tomorrow for your problem solving for both the chapter number 1 and chapter number 2. Janvi, Vaishnavi, Priyanka, everybody has a good evening. So Lalit, you want to summarize the provisions of residential status, what we have discussed till now? So can we unmute Lalit Purohit? Lalit, please summarize the provisions of last session. I guess Lalit is not there. Anyone else wants to summarize the provisions what we have gone through in our last session? Mahalakshmi wants to do that. Yes, Mahalakshmi, please go ahead.
Good evening, sir.
Good evening.
Firm, individual, HUF, and individual and HUF as three divisions: resident, ordinary resident, and NOR, and other companies on the firm has two. It is resident and NR, non-resident, and individual. An individual we have general condition, which is 182 days in preceding previous year, or 60 days plus 365 in 4 preceding previous year. And there are some special conditions for the who gone for the business purpose, employment purpose, and ship members, and deemed resident is always resident, not ordinary resident, and the person Indian origin should have 182 days who have more than 15 lakh income. He has the condition of 182 days in previous year, and or 120 days in and in 365 days on for preceding previous year.
Okay,
and,
so what is the condition to become a resident and not ordinary resident? So Benipreet Kaur also raised her hand. So I would like to ask Benipreet, please go ahead, and if you have would be summarize that provision, I would like you to summarize about the sub-classification and the sub-classification after becoming a resident in case of individual. So there is category of resident and not ordinary resident, and resident and ordinary resident. So kindly summarize about it, Benipreet.
Good evening, sir. Therefore, being a resident and not ordinary resident, we have categorized it into 3 parts. In first category, there are individuals of general cases and individuals of special cases, except the third case of the special case, in which they are individuals who are citizens in person of Indian origin and have earned more than 15 lakh in India. They will categorize separately as the second category of resident and not ordinary resident. In third will be the deemed resident. Deemed resident will always be the resident and not ordinary resident. Let's come back to the first one, in which for being the resident and not ordinary resident, after becoming a normal resident in the general case and special cases, first and second points, the person should not be for more than 730 days in India for 7 preceding years. It shouldn't be resident for 9 years out of 10 preceding years in India. For the individual who came in the third point of the special case, the conditions applied in the first category will be there, plus one additional condition that he or she should be, if he or she is more than 120 days in Indian preceding year, but less than 182 days, then also he or she will be resident and not ordinary resident.
Well done. Very good. Very good. Well done. So, more...
Can I say one thing?
Yes.
Sir, my name is Bani Preet.
Okay, Bani Preet. Sorry. Okay, Miss Bani. Thank you. Okay. Well done. So there is queries. Prem is asking, sir, can you explain the 15th and 22 question of your assignment PDF page 35 and 42? Prem, are you asking from basic concept topic assignment or residential status? Okay. Soumya is asking a question. Sir, in deemed resident, we have the income limit of exceeding 15 lakh. What if an individual income is less than 15 lakh? How to categorize, sir? Is there any income limit for other category apart from deemed resident? No. If the income is less than 15 lakh, then Soumya, we have to see, does it fulfill the condition of being a normal resident, whether under general condition or a special condition? So if income is less than 15 lakh rupees, then we have to only follow the general condition or special condition. We do not have any other income criteria. That person could not fall under the deemed resident category, and also that person cannot fall under special condition, B case, third category, because in third category also we have to take only those persons, those are having income exceeding 15 lakh rupees. Okay. No, sir, I was asking that the rate have been changed from 3 to 6, 5%, 375. So it makes it 20,000 and rebate is available when income is 7 lakh or lower, for which rebate available is 25,000. Yes, income rebate is still 25,000. The rebate has not been decreased even after the change of rates. So Prem Kumar, we will take the basic concept problem. One more class would be here. That might not be in your schedule, but we would have a separate class for the problem solving question that would be on 13th. So in that class, you can ask these queries. We will solve all MCQ there, and the remaining question, what we have left for practicing. Okay. Okay, so before starting the class, let's share the thought for the day, which we missed out in our last session. So this is a very interesting thought for the day, and it says dream big. Of course, it suits your profession, your journey. Dream big, that's to become a chartered accountant. So you already have a dream to become a chartered accountant, but you have to stay positive. Do not lose this positiveness. It's very important. If your examination is in May, and even if you think that you are not fully prepared for the examination, so still there is still time. If you will focus, if you will do hard work, you can still crack the examination. So be positive. If somebody is saying you that you won't be able to clear this examination, CA is very difficult, you don't have that talent, etc., just ignore these kind of thing and these kind of people. So stay out of negativeness. Just be positive that yes, you can do this. That is a very important virtue, because being positive, it's a very, very strong feeling. It can do miracles. Okay. Work hard, of course, you have to do work hard. There is no escalators to become a chartered accountant. It's a hard working profession. So if you are working hard with the discipline, definitely you are going to successful later or sooner. And the most beautiful thing, enjoy this journey. Once you will be a chartered accountant, you will recall these memories, the time when you were depressed, when you were thinking that you can't make this up, but still, just very important thing that you have to enjoy this journey. There would be a destination when you will be a CA, but please enjoy this journey. Don't take extra burden, don't take stress, etc., because this is a profession which needs a lot of things like your positiveness, your hard work, some kind of pressure, examination. There might be some personal issue in your family also, but still you have to be very sure that you will be a CA later or sooner. So please stay positive, work hard, and please enjoy this journey. Like it says, na, Zindagi na milegi dobara. In the same way, this time will not come back. So just enjoy this, and definitely you will be a successful chartered accountant very soon. Moving on to the next topic. So in the first session, I have told you that the residential status will impact the taxability of your income. How it's going to be, that is the today's session topic. Okay, Avinash is saying, sir, my messages is showed to you or not? Yes, I can see your message, Avinash. Good evening. Pavan, good evening. Garima, good evening. Priya Mishra is saying the slab rate have changed, but for us, we have to learn the same slab rate. You have taught us for September 2025. Yes, exactly. So we are discussing assessment year 25-26 provision. That means previous year 24-25 provision. That means we are discussing Finance Act 2024. So the provision would be same for this May 2025 September 25, even January 26 examination. That would be same. So how to find out the residential status that we have discussed. Okay, before starting today's class, I would like to ask a question, a very simple 1 or 2 question with you. So I can see that have you done your homework brilliantly, excellently as I've asked you. So there is a question. Suppose there is a XYZ company and it's a partnership firm. Okay. We have 5 partners in this partnership firm, X, Y, Z, W, and P. Okay. X was non-resident. Y was also non-resident. Z is also non-resident. W is resident and ordinary resident. And P is resident but not ordinary resident. So you have to find out the residential status of X, Y, Z and company. So would it be resident, non-resident, etc.? So as per the information given, you have to tell me what would be the residential status of this partnership firm. They are saying non-resident. Very good, Pooja. Ayushi is also saying non-resident. Deepika is also saying non-resident. So you must have gone through with the provision in last 2 or 3 days. Kush Abhisha is also saying non-resident. Harshada is also saying non-resident. Soumya is also saying non-resident. Brilliant. So as I always asked, you have to understand the question first. When there is a question in front of you, like this question in front of you, and that was the information which has been given in front of you, according to it, okay, somebody is saying resident also, Rajita is saying resident. Well done, very well done. I appreciate that. So it does not mean that you're just going to read the question and you are just going to give the answer. That is not the correct process. The process should be to understand the question. Then it should be processed as per the provision. You have to think about the provision. And after applying that question as per the provision, then you should think about the solution. So those students, those are giving answer like resident or non-resident. They just technically read this question and just went to the solution that majority of partners are non-resident. So that would be a non-resident partnership firm. But did you recall the provision of finding out the residential status of a partnership firm? Some of them, of course, gave the correct answer. I'm not taking their name because those are giving the wrong answer. It's more important that you should understand what is the provision regarding partnership firm to find out whether it is resident or non-resident. It depends upon the control and management, of course. And in this question, there is no information regarding control and management. So we cannot find the residential status on the basis of partners' residential status. And when we were discussing the provisions of partnership firm residential status, I told you the partner's residential status is irrelevant. We have to find the control and management. So those are giving the answer of resident, non-resident. They are just skipping this concept. So how we answer? We listen problem using our ears. Then my brain needs to process it as per the provision. Then my mouth is going to speak, or we are going to give the solution. So that is the process: listening, thinking, and then speaking. What you are doing? Listening, speaking, speaking. That would be wrong. So please, it's my humble request, whenever there is a question, do not give answer without recalling the provision regarding which that question has a connection. So if there is a partnership firm, before giving the answer, you should recall the provision that, oh, sir told us that in case of partnership firm, there should be control and management. And in this question, I am not able to find the control and management. So I cannot answer this. So you should write it down that, sir, information is missing. we should know about the control and management. And if I am going to give that control and management, then only you are able to solve the question. So a lot of students has asked me in the chat box that, sir, control and management information is not given. We cannot determine. But a lot of also giving me the answer of resident and non-resident. So please be careful that you have to apply provision, then you will be on the solution part. Okay, good. Next, one more question. Now, this is simple. Suppose Mr. Ram, who is a foreign citizen, comes to India first time on 15th December 2024 for visit of 200 days in India. So you have to find the residential status of Mr. Ram. So you have 2 or 3 minutes. Take your time and let me know whether Mr. Ram would be a resident or ordinary resident or not ordinary resident, or non-resident. He is not, of course, person of Indian origin. He is not person of Indian origin also. He is a foreign citizen and not a person of Indian origin. Please mute yourself. Some students' background sound is coming, so kindly mute yourself, students. So he has come for visit of 200 days. So what should be the residential status? Aman is saying resident and not ordinary resident. Abhinav is saying resident. Rajiv is saying resident and not ordinary resident. Query portal वाले बच्चों, तुम लोग भी आंसर दे दो. Rajita is saying resident, not ordinary resident. He is a deemed. You cannot call somebody deemed resident until there is information regarding the income. So if I have not given 15 lakh rupees income information, you cannot identify anyone as a deemed resident. Soumya is saying resident and not ordinary resident. Rajita is asking, what are the additional conditions, sir? This is the complete question you have. What additional condition you want? You have to find out the answer on the basis of this question. And this question is having all the conditions, so you can go through the answer. Ishan is saying, okay. Rihan is saying resident, but not ordinary resident. Either query portal per Kesapuram Kumari is saying non-resident, Jilik Chatterjee is saying resident, Brahmpal is saying non-resident, Avinash is saying non-resident, Vijita is saying not ordinary resident, Aman Patel is saying resident and not ordinary resident, Bani Preet, okay, Bani Preet? Non-resident. Mosam is saying non-resident. Citizenship does not affect residential status. What is the impact of citizenship that we have seen in case of in our last session? So if he would be a citizen of India and if he would come for visit, then a special condition would be applicable. So now the correct answer is Mr. Ram would be a non-resident. As soon as you read this condition, this is the question which has been asked in the examination also. So you might be feeling it's very simple, but it was not that simple. So if I'm asking any question, if I'm wasting my 5 minutes, or if I'm technically spending my 5 minutes for writing this and asking you a question, that could not be simple. Just remember this thing, okay? That could be tricky. So when you saw this 200 days, so most of you must have think that he is fulfilling 182-day condition. So automatically he would be a resident. Now the problem is we have to find it out whether he is a resident or ordinary resident, or resident or not ordinary resident. But you missed it. He has come on 15th December 2024 for 200 days. Mosam is asking in this case, special condition apply? No, Mosam. We have seen special condition apply when either you are citizen or person of Indian origin. When I have said to you that he is not citizen of India, not person of Indian origin, that means basic condition would be applicable. So he has come on 15th December for 200 days. But the days of 182-day condition should be, you should be in Indian previous year. That means from 1st April 2024 till 31st March 25. He must be in India for more than equal to 182 days. But as he comes to India on 15th of December, that means we have to find it out how many days from 15th December till 31st March he was in India. So if this duration is more than 182 days, then we can say that he is a resident. So if because you are watching this condition 200 days, so you automatically applying that this condition has been fulfilled, but not yet. Let's calculate the days. 15 December, he has landed into India. So that day would be counted as in India. So that means he was in India for December month from 15th till 31st. So how many days was there? 12, 15, 16, 17, 18, 19, 20. So technically 17 days he was in India in December. January 31 days, February 28 days, and March 31 days. So how many days it was? 107 days only. So out of 200 days, he was in India in this previous year only for 107 days. So he is not satisfying condition number 1. That was 182 days. So now we will check second condition. So he is fulfilling 60 days condition, but as in the question it has been written that he comes first time into India. So in last 4 preceding previous year, he was not in India at all. So that means that 365 days condition is also not fulfilling. So what he would be? He would be a non-resident because he does not fulfill any of the basic condition. You got it? So kindly, as I have asked you earlier also, please read the question. Then please apply the provision and then you will find out your correct answer. Correct. Sure. Now moving on to today's provision. So all these provision we have gone through. Now we are going to see the impact of being a resident. So this is the provision, that is taxability effect on becoming a resident or ordinary resident or not ordinary resident or non-resident. For the time being, let me tell you, from the point of view of taxability, to be a non-resident is a good news. If you are a resident and ordinary resident, then you have to pay tax on all of your income which has been earned or received or in India or outside India. So this is now section 5 we are going through. Incidence of tax. Incidence means burden, imposition. Scope 5 of total income says, section 5 provides the scope of total income in terms of the residential status of the assessee because the incidence of tax on any person depends upon his residential status. The scope of total income of an assessee depends upon the following 3 important considerations: the residential status of the assessee, the place of accrual or receipt of income, whether actual or deemed. What is the meaning of deemed or what is the meaning of actual income? That we will go through in this chapter later. The point at which the income had accrued or was received by or on behalf of the assessee. So the taxability depend upon your residential status, the place of accrual or receipt of income, or of the time when that income has been accrued or received by or on behalf of the assessee. The ambit of income. Now we will see what kind of income is going to be taxable in the hand of resident and ordinary resident. And let me tell you, all incomes would be taxable in India if you are a resident and ordinary resident in India for that previous year. So the total income of a resident assessee would under section 5.1 consist of everything: income received or deemed to received in India, income arise or deemed to arise in India, income arise or deemed to arise outside India. So if you are a resident and ordinary resident, even if you are earning income in India or receiving income in India, or if you are earning income outside India or receiving outside India, does not matter. You have to pay tax on that income, at least in India. So there could be a situation. Suppose I am a resident and ordinary resident in India, and I went outside India for some work. Suppose I went to USA for some days, for 10 days only. And I have earned from there. I am providing some consultancy service there. And suppose I have earned 10 lakh rupees from that consultancy service in USA. So because I am a resident and ordinary resident in India, so I have to pay tax on that 10 lakh rupees in India. That is the provision what we are going through. But that might be possible that USA also asking to deposit tax on that 10 lakh rupees because we have earned and received that 10 lakh from their country. So that is called double taxation. So in case of resident and ordinary resident, that could be possible because the provision of income tax says if you are a resident and ordinary resident, so you have to pay tax on any income whether earned, received in India or earned, received outside India. So that 10 lakh rupees is going to be taxable in India because I am a resident and ordinary resident. But that would also be possible because I have earned that income from USA. So maybe that country also going to charge tax on that income because I am earning income from that country. So in that situation, there could be a probability of double taxation. For that purpose, we have a chapter of double taxation avoidance agreement. That would be at your final level in which this kind of condition has been summarized. That if there is an income on which taxability in two countries, then one country would give relief and that would be as per the agreement or etc. That is a separate concept. So please, whenever I'm asking or whenever we are going with these provision for a resident and ordinary resident, and the question would maybe arise in your mind that that kind of income could be taxable in other country also and in India also, then what will happen? So before that question will arise in your mind, I have just clarified that. In that case, there would be a separate chapter. That kind of provision is not going to be asked in examination. We have to just tell one thing to the examiner that yes, this income is going to be taxed in India. Okay. So whether received or earned in India, outside India, or received, earned anywhere, that is going to be taxable in India. Just read the provision with me, and then I have made a format, a diagram. You will understand clearly that what kind of income is going to be taxed for which person. In simple terms, a resident and ordinary resident has to pay tax on the, you can see, total income accrued or deemed to accrue, received or deemed to receive in or outside India during the relevant previous year. So it does not matter where you earn that income. You have to pay tax on that income. But if you are a resident but not ordinary resident, then you have to pay tax on in India for income those are earned in India, or income those are received in India, And if the income has been earned or received outside India from a business which is controlled from India, So there is an exception that if there is any income which you have earned or received outside India, but business not controlled from India, then you need not to pay tax on that income in India. But for the purpose of resident and ordinary resident, does not matter whether business controlled from India, not controlled, does not matter, going to be taxable. But for the purpose of resident and not ordinary, this is the benefit you have, that if business is controlled from outside India and income is earned, received outside India, then you need not to pay tax on that income. Don't worry, we will discuss with the help of a diagram. But if you are a non-resident, only two kinds of income is going to be taxable. Only those have been earned in India and those have been received in India. I will give you an example of each income. Just stay with me. Any income which has been earned or received outside India, whether business control from India or not, does not matter. Only two incomes are going to be taxable for the purpose of a non-resident. So let's understand this concept with the help of a very simple diagram or format or a table. So now you will get to know that what kind of income is taxable for whose, and with example also. So incidence of tax, the particulars will show the kinds of income we are talking. So income arises, earn, or deemed to arise or earn. So first of all, understand the difference between income arises, earn, or deemed to arise or earn. Income arises, earn mean which has been arised or earned directly from India. That is called earn or arise or accrue. Deemed to arise or earn means which is indirectly earned or arise from India. Now, what is the meaning of that indirect? That we will discuss separate under section 9. That topic would be covered after this incidence of tax topic. So if income arise, earn, or deemed to arise, earn in India. So if any income which has been arise or earn in India, whether directly or indirectly, while received anywhere, whether received in India or outside India, does not matter. But if income arise or earn India, the main concept, arise or earn India, then receive anywhere does not matter. That is going to be taxable for ordinary resident. Even if you are a resident and not ordinary resident, and even if you are a non-resident. So in all cases, this is going to be taxable. This needs to get taxable for all kind of person. If the income is of the nature that it has been arise or deemed to be arise in India, whether received anywhere. Let me tell you with the help of an example. Suppose there is Mr. A who works in XYZ Limited, an Indian company, and he is providing his services. He is doing job in Delhi. So the job place is Delhi. Now Mr. A asks his employer that please, whatever is my salary, suppose his salary is 20 lakh rupees per annum. So Mr. A asks his employer that whatever amount of my salary is, kindly deposit this in my USA bank account. I have a bank account in USA. So kindly deposit my salary of 20 lakh rupees in my USA bank account. So now you can see where has been the service is providing. That has been providing in India. That means the income has been earned or arise or accrue. The work has been done in India, but the income has been received outside India. So if the income has been earned, arise, or accrued in India, then it is irrelevant whether it has been received in India or outside India. This kind of income is going to be taxed for all kind of person, whether you are a resident, ordinary, not ordinary, or non-resident. So nobody has the benefit. This is taxable for all kind of category. The source of income would be given in the question. So first point was this. It says that if you have earned income from India, suppose, let me give you one more example. Suppose there is a doctor who came from outside India. Suppose Mr. B is a doctor, he is a foreign citizen, he came from USA for any operation that is going to be held in India. For his patient, he specially come for the operation. So he is a non-resident, he came to India first time of his lifetime. So he came to India and operate in India. And the fees was suppose 50 lakh. And he said this fees would be in my USA bank account. I will not take fees in India. This fees need to be deposited in my USA bank account. But you can see where has been the services provided in India. So the income has been earned in India. Even when it is received outside India does not matter. But if the work has been done in India, that means that would be called income arise in India. It is going to be taxable whether you are a non-resident, whether you are a not ordinary resident, whether you are a ordinary resident. So that was the example of point number 1. I hope it's clear now. Moving on to second point. Second is reverse. The first point talks about that income has been earned in India, received anywhere. The second point is reverse. Income has been received in India, earned anywhere. The same treatment. You can see income received or deemed to be received in India, while earned arise anywhere. So it is again going to be taxable for all persons. We can understand the reverse example. Suppose I am doing a job in a company which is in USA. So I am providing my services in USA. But I have asked that company that my salary should be received in my bank account, which is in India. So now earning is outside India, but the amount has been received is in India. So again, that kind of income is also going to be taxable for all cases. So again, if I went outside India for consultancy purpose, I have provided consultancy there. But I have asked that that income should be received in my Indian bank account. So again, the arise or the earn has been outside India, but the amount has been received in India. So that is again going to be taxed for all kind of person. So if one of this condition has been fulfilled, that income has been either arise in India or received in India, that is going to be taxed for all kind of person, whether you are a resident and ordinary resident, resident and not ordinary resident, and of course, non-resident. Now from third category, you will see the benefit would be flow to the non-resident, because point number 1, point number 2 does not matter, going to be taxable for all. But now the third point will change something. Now income received and arise both outside India. Now income is arise and receive both outside India, but business is controlled from India. So if this is the case, then what will happen? That is going to be taxable for resident, ordinary resident, and resident not ordinary resident, but non-taxable for non-resident. Suppose Mr. A is working in USA in Reliance company branch office in USA, and he's getting salary of 20 lakh rupees in USA plus received also there. So income has been earned outside India and income has been received outside India. But this business control, the head office of this business is in India. So this business has been controlled from India. So this kind of income is going to be taxed for resident and ordinary resident, resident and not ordinary resident, but it is not going to be taxed for non-resident. As you can see, this is the category in which this is taxable for this person, but non-taxable. So if you are a non-resident on this kind of income, you need not to pay any tax in India. Now, point number 4 will say everything is outside India. Even control is outside India. So income received and arise outside India, and business also controlled from outside India. But you have to pay tax if you are a resident and ordinary resident. You need not to pay tax if you are a resident and not only resident or non-resident. So we can say that non-resident need to pay tax only on 2 incomes. Resident and not ordinary resident need to pay tax on these 3 income. And if you are a resident and ordinary resident, you have to pay tax on all kind of income. Whether they receive, whether they arise, whether the control is, does not matter. It is that much, the scope of this taxability, the taxability scope is that huge that suppose you have been called from NASA. NASA have asked you, NASA, you know, that the space operation of USA company. So suppose NASA has offered you that you have to go to Mars. Okay, Mars, Jupiter, Pluto, whatever planet you like. And you have to do some research for us over there. You said, okay, done. And the remuneration is 1 crore rupees, and you will receive that remuneration on that planet. We have sent a briefcase in which that amount of remuneration has been on that planet. You go there, do some research work, and that come back, and that income is in a briefcase on that planet. So you have agreed. And you are a resident and ordinary resident of India. You went to Mars or that planet, whatever you like. You done that research work. So where has been the work has been done? Outside India. Technically, outside this world. Technically on some other planet. And where the income has been received on some other planet. But what will happen? If you are a resident and ordinary resident, when you will come back, income tax of India will say, okay, come here. You have to pay tax. Because it does not matter whether income has been received in India, arise in India, control in India, does not matter. If you are a resident and ordinary resident, you have to pay tax on that income. So the scope of taxability for a resident and ordinary resident is this much wide that if you are earning from wherever, it does not matter, you have to pay tax in India. But now there is a point number 1, which is again very important. And all kind of income has been already discussed in point number 1, 2, 3, and 4. But this point number 5 would be in question. Maybe that would be in question to just confuse you. So point number 5 does not consist any kind of income because income could be only of 4 types, whether in India, outside India, both outside India, that's it. But point number 5 could be there in a question to make you confused. So please remember, point number 5 information, if has been provided in the question, you have to ignore it. You do not need to do anything with it. You have to exclude it from the treatment. So that is, you just need not to do something with point number 5. So I am not asking you to do something with point number 5. I am just asking you to please skip point number 5 information if that has been given in a question in the disguise of an income. You have to find out whether that kind of information is as per point number 5. You have to leave it. And when I will teach you what is the meaning of point number 5, you will understand why I am asking you to skip it. Because that is not the income of my concerned previous year. Point number 5, point number A. Income of earlier year or preceding year. Suppose if the question says that there is 50,000 rupees untaxed income of earlier year, okay, not for your previous year or preceding year, not your previous year. even it's saying it is untaxed. So we cannot tax return our current year income. That would be taxed as black money, etc. But that is a separate provision. We cannot include that in our table for taxation. So if there is any income which has been given in the question and it has been written, that is, it is 50,000 untaxed income or taxed income of earlier year. These words are important. If there is any income which has been connected to earlier year or preceding year, you have to ignore it. You do not need to do anything with that because that is not my current year income. I just need to tax my previous year or my current year income. So you can do that. You have to just skip it. Okay. And the last point, income brought or remitted into India. Income would be taxable on the basis of arise, received, and control. If income has been remitted into India or brought to India, that does not affect the taxability at all. Let me tell you how. Suppose Mr. A is a non-resident and a foreign citizen. He lives in USA. He earned there, he received there. 50 lakh rupees he earned there. So suppose Mr. A is a doctor, he practiced in USA, he is a foreign citizen, he is receiving income in USA, he is providing services in USA. Out of that, he have earned 50 lakh rupees. So in India, his status would be non-resident. Clear? He comes to visit India. And out of that 50 lakh rupees, he brings with himself 10 lakh rupees for expenditure, etc., for travel purpose. So that 10 lakh could not be the part of received in India. Received in India means when income first received. So first it has been received in USA. So now this is called remittance of income. And remittance would not tax your income at any way. So if in the question it has been written that income of 10 lakh rupees received in USA, out of which 3 lakh remitted into India. So that remittance would not taxed at any way. We will tax that income according to the received or earned. That remittance part or brought into India does not matter. As the same example I can give you, suppose I have earned 10 lakh rupees in this year. And suppose I am going outside India for travel purpose and 2 lakh rupees I am taking with myself. So if I'll enter into any other country, would they ask me to pay tax on that because I have earned that income in their country or I have received? The answer would be no. So remittance would not be taxable at all. Remittance and brought cannot be taxed at all. Only income could be taxed on the basis of receipt, on the basis of earn, or on the basis of control. Understand? So if any income connected to earlier year, ignore it. If any income which has been brought or remitted into India, kindly ignore it in the question. We do not need to do any treatment of this. We will see with the help of example also. That would definitely going to make that crystal clear for you. Okay. Vishnu Vardhan is asking, for second point, what if the country of origin also tax the income? I have told you, Vishnu, that if that country of origin is going to tax that income, so that would be the case of double taxation avoidance agreement. That would be discussed at final level. So for intermediate level, you have to just give your answer from the point of view of India. That what would be the treatment of that income in India, whether it's going to be taxed or not. Okay. Shri Hari is saying universal income is taxable for resident and ordinary resident. Yes, absolutely correct. Theo Moji is asking, if Indian is working in Maruti car company in Japan, is he have to pay Indian tax or Japanese tax or both? Look, I can give you answer what is going to be the treatment in India. What is going to be the treatment in other country, that I don't know, because that for that purpose we have to read the income tax act of that country also. अपनी country का नहीं हो रहा बच्चों, उधर का कैसे याद करेंगे? Okay, but your question is something is missing in your question. You have to tell me the residential status of that individual. If he is a resident and ordinary resident, I can give you the answer that that income needs to be taxed in India at least. If he is a resident and not ordinary resident, then you need to tell me whether that business is controlled from India. If yes, then of course going to be taxed in India. And if he is a non-resident, then if he is not receiving in India, not earning in India, then not going to be taxed. Subhanshi Grover is asking, remittent means in India. Remittance का मतलब होता है शुभांशी लेकर आना, पैसे लेकर आना. देखिए, अर्न का मतलब है कमाना, कि हम कहां पर काम कर रहे हैं, उसके थ्रू हमारा पैसा क्या हो रहा है, इनकम अर्न हो रही है. रिसीव का मतलब है पैसा अर्न होने के बाद पहली बार कहां मिला. अगर आपको फर्स्ट टाइम सैलरी आपके अकाउंट में मिल जाती है, आप जॉब करते हैं तो कहाँ मिलेगी, आपके अकाउंट में, या कैश मिल सकती है फर्स्ट टाइम. बिजनेस करते हैं तो भी पैसा कैसे मिलेगा, अकाउंट्स में या कैश मिलेगा. तो वो फर्स्ट टाइम रिसीविंग है. एक बार वो पैसा रिसीव हो गया, उसके बाद आप उसे जहां भी खुद लेकर जाएंगे, खुद, दैट वुड बी कॉल्ड रेमिटेंस. तो रेमिटेंस का मतलब है उस पैसे को ट्रांसफर करना, लेके जाना एक जगह से दूसरे जगह पे. Dhanush is saying, can you tell once more B point? B point. Okay, so B point was, I have, when we will solve the question, that would be more clarify you what is the meaning of point number B, how it would come in the question. So as I've told you, in the case of numerical provision, because this is a numerical provision, so until we will practice some numerical, that would not be that much clear with the theoretical provision. But again, if you have earned income, you have received income once, then after receiving that income, if you are carrying that income, that would be called remittance, and that is not going to be taxed for you. Mohammed Faraz, please mute your audio. Students are saying that there is sound is coming from the background. So it's my request, please, Mr. Mohammed Faraz, please mute your audio. Thank you so much. Okay. Amman is saying, so we have to only consider previous year income and which only arise or earn. Well done. Absolutely correct. We just need to focus on the previous year or current year income. The preceding year or earlier year incomes are irrelevant. Deemed to received or deemed to arise meaning, Deepika, that would be discussed in this chapter after this topic. Divya Ramesh is saying, explain in English too, sir. I am explaining in English everything, Divya. Harshda is asking, what if a resident? Avinash is also asking, what is the meaning of deemed received? We will discuss the meaning of deemed received also. Just stay with me. Have patience. Avinash is asking, sir, income tax rules are same in foreign country. How would I know? They all have their income tax act. So I don't know. Of course, there would be different rules in other country. Okay. So what if the resident ordinarily resident earned income in cash? What if mean that is going to be taxable? Maybe you want to tell that if he is earning that income in cash, so how income tax would come to know? That would be the different case. If you are giving information that you have earned income in cash, that is going to be taxable. If you are hiding that income, that would be black money. That would be the separate case. Pooja is asking for break. Pooja, break would be around 7:15. Mohammed Faraz is saying, very sorry, sir. No, it's okay. It's okay. Chalo, next is Kushi Shukla is asking, sir, if someone is leaving India for employment purpose outside India and pays some amount in India, their parents, then the amount is taxable in India. So it will depend upon the residential status of parents. So of course, parents would be resident and ordinary resident. So if he pay that amount to his parents as a gift, that would be the income in the hands of his parents. But let me tell you, gift from relative is exempted. We have a chapter of income from other source that says that gift from relative is exempted. But for time being, yes, that would be counted as income of other person. That would not be a remittance because for parents, they are receiving that income first time. Remittance is for the same person. If I have received some income, then if I am carrying that income into another country, so that would be called the remittance. Remittance, let me tell you how. I have received some income in my pocket, right hand pocket of 10,000 rupees. So that is called received. after that 10,000 rupees I have received in my right hand pocket, out of that 10,000, 8,000 I have switched into my left hand pocket. So that is again the same income. That is called remittance. That is not going to be taxed again. So once when I received that 10,000, that would have been taxed accordingly. After that, what I am doing with that income, that is called remittance. If I carry that income to anywhere, that is not going to be taxed. Still, when we will solve question, you will understand what I am going to explain. So if someone got in cash only that, what will happen? If he is not declaring, that would be the black money. When income tax will come to know, they will charge the penalty, interest, etc. Okay. Dhanush, which is not a previous year income remitted. Current year income means earned in 25-26. No. Current year income means which is earned in previous year. That means 24-25. Okay, so let's go ahead. There is a clarification regarding the exemption. You can go through it. Now, what is the income deemed to accrue or arise in India? Section 9(1) is going to explain. So, if the income has been flowing from India, directly or indirectly, that is called income deemed to arise in India. So, we have specific provision that what would be treated as income deemed to accrue or arise in India. One by one, we will discuss all these cases. Okay. So income deemed to accrue or arise in India, section 9. Certain types of incomes are deemed to accrue or arise in India, even though they may actually accrue or arise outside India. The first category, income accruing or arising to an assessee in any place outside India, whether directly or indirectly, from any business connection in India. Business connection means if you have a subsidiary in India, if you have a branches in India, if you are having head office in India, if the goods has been delivered from India, if the orders has been comes from India, etc. So there are certain cases which has been treated as business connection. So if the business connection is directly from India or indirectly from India, that would be treated as income arises or deemed to arise from India. Second, through from any property in India. So what is the meaning of that property in India? That is going to be discussed in detail one by one. Through or from any asset or source of income in India, through the transfer of capital asset situated in India, would be deemed to accrue or arise in India. So in case of your business income, that would be deemed to arise in India if you are having a business connection from India. In case of house property, like rental income, that income would be deemed to arise in India if that property is situated in India. If there is any income from any asset or source of income, if that asset or source is in India, then that could be treated as income deemed to arise in India. And through the transfer of capital asset, if you are transferring your capital asset, that could also be treated as your income deemed to arise in India if the connection is from India. Okay, Rihanna is saying, sir, first we determine the residential status. Then when a person has multiple income, we check each if taxable or not using this. Then we include it in total income. Is this right according to the condition in tabular column? Yes, you are absolutely right. In a question before taxability, we have to find out the exact residential status of that person. According to that, multiple income must be given in the question. And according to his residential status, we have to see what kind of income is going to be taxed for that particular person. We will see in the numerical portion, do not worry. Rajita, we will discuss each and everything with example. Just stay. Like now it's explaining what is the meaning of business connection. In the case of a non-resident, the following shall not, however, be treated as business connection in India. In the case of a business in respect of which all the operations are not carried out in India. Let me show you. Provision says in case of a non-resident. Look, if you are a resident and ordinary resident, or if you are a resident and not ordinary resident, if the business is in India, then that income is going to be taxed. Where it is received outside India or in India does not matter. So the purpose of business connection explanation is for non-resident. Because if that activity does fall in the business connection definition, so we will treat that income must be arises or deemed to arises from India. And if that income becomes deemed to arise in India, then what will happen? That is going to be taxed for even non-resident. So there are certain connection which has been treated as business connection from the point of view of non-resident. So suppose a non-resident is having a business head office in India, and he is earning income from that head office which has been in India. So that would be treated as business connection from the point of view of this non-resident. If he open his business head office in India, he says, no, I will not open head office in India, I will open a subsidiary. So his holding company is outside India, but he opens a subsidiary of its holding company in India. And that subsidiary is earning income by doing business activity in India. So that would also be classified for the purpose of non-resident as a business connection. Suppose you open an agency or a branch in India. Still, all these would be considered as business connection from the point of view of this non-resident, because technically they are earning income from Indian public. They are selling their product to Indian people, and technically the payment has been made by that Indian person, which is ultimately is going outside India to that non-resident. So this kind of connection would be treated as business connection. So if you are opening a holding company of your business in India, or a head office, or a subsidiary, or an agency, or a branch, and if that income flow from India to outside India to any non-resident, that would be treated as your business connection. Clear? Now, there are certain things which would not be treated as business connection, and that is more important to understand. This is general provision. You can see income indirectly flows from India by your holding company you are earning, or by your subsidiary, or via your agency, or via your branch. Ultimately, that income flows outside India into your hand, and you are a non-resident. So you have to pay tax on that income, because that would be included in the definition of deemed to arise in India, because indirectly you are earning income from India. But what would not be treated as your business connection, that is more important. And what it is? Now, suppose the provision says Mr. B, he is of course non-resident in India. He lives in USA, citizen of USA. And suppose he is manufacturer of cars. He manufactured cars and he sold these cars in USA only. He does not sell these cars in India. So he's not earning any income from India. So income earned would be when you sell your product or providing your services into India. So the public of India is paying you. That is technically called the basic concept of business connection. But in this situation, Mr. B, a non-resident, he is manufacturing of car business, and all those cars is going to be sold in USA. So there is no connection to India. But what is happening? Everything has been manufactured in USA. the car body, all the part, etc. But he decided that the manufacturing of tires, so he opened a factory for the manufacturing of tires in India. And listen very carefully, he's not selling these tires into India. No, he just manufactured tires in India, and after manufacturing, these tires have been transferred to his USA factory, assembled into the car, and those car is going to be sold in USA. So there is no directly income earning from India. But the provision says when he sold these cars, suppose out of this sale, he earned income. He earned income of, suppose, 100 crore. Out of this sale, he earned income of 100 crore. Now, income tax of India asked him to pay tax in India, because if we did not manufacture, if we do not allow him to manufacture tire in our country, how he would be able to sell these cars? So the provision says no. If some part of manufacturing operation has been conducted in India, that only proportionate income would be treated as deemed to arise in India. So out of this income, there would be some income is going to be treated as deemed to arise in India. Why? Because he has used the resources of our country. He has used the place of our country. He has used the environment of our country, the infrastructure, our country's labor, etc. So for that purpose, in any case, if there is a non-resident who undertakes some manufacturing operation in India, that only profit which would be proportionate to that manufacturing operation or part of manufacturing operation which has been done in India, that income could be treated as deemed to arise. That proportion could be calculated on the basis which would be decided by the government. For the example, I can say, suppose the cost of the car is, suppose, 50 lakh. Out of the 50 lakh, suppose the tire costs are 2 lakh rupees. So as a general rule, we can find it out like 100 crore is proportion to 50 lakh. So for 2 lakh rupees, this income could be treated as deemed to arise in India, but full income would not be treated as deemed to arise in India. So that is the point what we are going to discuss. And it says, in case of business in respect of which all the operations are not carried out in India, in that case, only proportionate, reasonably attributable to the operation, that particular income could be treated as deemed to arise in India and not the full income. The third case regarding the purchase of goods. So in case of manufacturing, there would be some income. The partial manufacturing part income could be treated as deemed to arise in India. That is only applicable in case of manufacturing. But if any non-resident purchasing goods from India, purchases, he's not selling into India. If he purchased goods from India, he's just doing trading. And after purchase, sell those goods at a higher price to another country. So that income would not fall in the category of income deemed to arise in India. Suppose I am a non-resident, I live outside India, I purchase 100 crore rupees shoes from Indian market and sold these shoes for 120 crore in another country. So that 20 crore profit I have earned, but that 20 crore would not be deemed to arise. Not any part of that income would be treated as deemed to arise, because in case of trading, there would not be any business connection established, because he does not earn any income. He does not use any resources of India. Even he has paid 100 crore to India. He has purchased 100 crore rupees shoes. So technically he has paid to India 100 crore rupees. That would be the income of the seller. Those have sold their goods to that person. So he's doing, actually, he's infusing funds into India. So whatever he will earn from that trading, that would not be qualified as income deemed to arise or earn in India. In case of non-resident, no income shall be deemed to accrue arise in India to him through or from operations which are confined to the purchase of goods in India for the purpose of export. Abhishek is asking, sir, what if cars are manufactured and sold in India while the tires are imported? If you are going to sell any product in India, then that full income would be treated as deemed to arise in India. That is not in question, of course. So for point number 3, had it been a resident, then if he would be a resident and ordinary resident, then whatever income he will earn from any country, that is automatically going to be taxable. And if you're resident and not ordinary resident, then again it would be taxable if business is controlled from India. If not controlled from India, then not going to be taxable. Rishi ji एक बार elaborate नहीं हो सकता because we are having short of time. So you can scroll back that video after the class. It's on YouTube. You can watch it as many times as you want. And if there is any confusion, so we are having a class day after tomorrow. On 13th of March हमारी एक class है जिसमें सिर्फ प्रॉब्लम डिस्कशन होगा. तो जिसको जो प्रॉब्लम हो जिस भी टॉपिक में आप मुझे बता दीजिएगा. आई एम गोइंग टू एक्सप्लेन. ओके. Collection of news and views in India for transmission out of India. Now again, this is the case of like trading case, whatever we have discussed. If any of news agency comes to India and record the news only, but they are not telecasting that news in India. If they are telecast their news in India, so technically they will earn income from advertisement, etc. So that is going to be directly arise in India. But they are only coming for shooting of news, etc. But transmission is out of India. Then again, that would not be treated as deemed to arise in India. So in case of a non-resident, being a person engaged in the business of running a news agency or publishing newspaper, magazine, journals, no income shall be deemed to accrue in India through or from activity which are confined to the collection of news and views in India for transmission out of India. If they transmit into India, that would be directly arise from India. So that is going to be taxable whether you are a resident, non-resident, does not matter. Now talking about shooting of films. After this shooting of film concept, we will take a break, okay? And after the break, we will have a small story. The story would not be at the end of the class. The story would be after the break, okay? So shooting of cinematographic films. So now we are talking about any films, movie, etc. So if any foreign company comes to India for shooting any movie, etc., then that, and if they are telecasting that movie outside India, then it would not be regarded as income arises or deemed to arise in India. Again, if you'll think what happened if they telecast their movie in India, that would be the directly arise in India and received in India. So we are discussing if even if they are shooting in India, still that would not be going to be taxed. But in this case, in case of movie, etc., there is certain condition you need to fulfill. That the producer should be a non-resident and non-citizen of India. So what we are saying, if there is a shooting of films, if they have been released in India, after shooting, if released in India, so that would be the case of taxability because income arises from India, received in India. So we are discussing when that would not be deemed to arise. So if they released outside India, in that case, your income would not be treated as deemed to arise if you fulfill these conditions. If the producer is an individual, then he needs to be non-resident and non-citizen. If the producer is either resident or citizen, both conditions should be fulfilled. So if he becomes a resident or citizen, then the income which has been earned or arise by releasing that outside India, that is going to be taxable in India also as deemed to arise. Not the full income, the proportionate part of shooting, but that is going to be taxed. If the producer is not an individual but a partnership firm, then all partners should be non-resident and non-citizen. Even one of the partner, if becomes resident or citizen, the proportionate part of that income which has been shooted in India. So the income you have earned from that movie released outside India, you have to pay some proportionate part of that income tax in India. And if that producer is a company, then all shareholders should be non-resident and non-citizen. If any one of become this, the proportionate income could be taxable as deemed to arise in India. So these are the provision. You can go through with this, of course, general provision. So I guess not much has been left, I guess. Yes, few provisions are there to discuss. So that would be discussed after the class. So let me see if there's any query. Sir, what in the case of iPhone manufacturing, which recently started their manufacturing, that would be a separate case. There must be a lot of facts about this. There would be some contract with government organization also for tax benefit, etc. So that we cannot discuss because we do not have the exact terms and condition. So, but you said that remittance of income is non-taxable. I'm still saying that remittance of income is not taxable. Where is the remittance? We are not saying the remittance if the movie has been released outside India, then we will consider that income to be taxable in India. Proportionate part, which is related to that shooting, that is need to be taxed in India. Remittance is still not taxable. It would not be taxable ever. Arise, accrue, earn is same thing. The difference is deemed to arise and actual. Deemed to arise means indirect arise, and normal arise means direct arise. Vishal is asking, sir, if film release both India and outside India, so whatever you will earn from income that has been released from India, that is going to be fully taxable. And if that person is non-resident, non-citizen, then outside India released income would not be taxable. But if he becomes resident or citizen, then some portion of from outside India release is going to be taxed as deemed to arise in India. Yes, Abhinav, only producer status need to be checked because the movie owner is the producer. So if producer is individual, we will check only him, his status. If producer is a partnership firm, then all partners need to be checked. If producer is a company, then all shareholder need to be checked for this condition. Okay. So Mr. Ashok sir, can we go for a 10 minutes break? Must have your tea, coffee, etc. Okay, so there are some queries. Bhumika is asking, sir, what if a partner of firm which made a film in India but released outside India, and he is not citizen but lives 365 days in India, so he would be a resident. And if he become resident, then whatever amount he received from release that movie outside India, a certain proportionate value need to be taxed in India also. Okay. Raja La is asking, hello sir, where can I find the PPT assignment and problem? I have only recently started to join the classes. I can't seems to find them. So please send the WhatsApp group link that you should mail to the BOS. They will give it to you, but all the PPTs are on BOS portal. You can log in there and there would be schedule, PPT, assignment, etc. All is there. Naveen is asking, sir, if Mr. B, a USA citizen, only assemble his car as a finished product in India and selling outside India, no manufacturing activity is carried out in it. Assembly is also a kind of manufacturing. So manufacturing means if you make a new product, whether via assembly or etc. So that could also be treated as deemed to arise in India. And these specific kind of ventures has been specific exemption, etc. And they have the specific contract with government also, whether state government or etc. So if the state government etc. has gave exemption, that would be a different case. But assembly would also amount to manufacturing. Want to clarify that if any foreign company is shooting in India and not telecasted in India, just the shooting is done in India. So no income is deemed to be earned or arise in India. Yes, there would not be any income deemed to arise in India, but the producer should be non-resident and non-citizen. If it is a firm, then all the partners should be non-resident, non-citizen. If it is a company, then all the shareholders should be non-resident and non-citizen. Next is Ms. Sandhya is asking, if a person purchase goods from India who is a non-resident of India, he sell the goods into some other country, would be taxable in India or not? No, that would not be going to tax in India at all. Proportionate income would be as per a specific case. That would be decided as per a specific case. So there is no fixed criteria is there. That would be decided by the government or the income tax department on the basis of a specific case. Okay. So I have a very small story for you, then we will continue our class. So the story is about positiveness. That's in the starting of this class, that was a thought for the day, that being positive is so important in life. So story was about a small kid, and that would be Hindi only. So एक छोटा बच्चा था जो एक स्कूल में पढ़ता था, और वो स्कूल में बहुत अलग तरह के क्वेश्चन अपने टीचर से पूछता था, और टीचर्स काफी इरिटेट हो जाते थे उसके क्वेश्चन से. तो एक दिन जब बहुत ज्यादा इरिटेट हुए तो उन्होंने एक लेटर दिया उस बच्चे को लिखकर एक एनवलप में, और बोला अपनी मम्मी को देना. तो जब बच्चा अपने घर गया तो उसने अपनी मम्मी को वो एनवलप दिया. उसकी मम्मी ने वो लेटर पढ़ा एंड शी स्टार्ट क्राइंग. तो उस बच्चे ने पूछा कि इसमें क्या लिखा है. तो उसकी मम्मी ने बोला इसमें लिखा है कि स्कूल के टीचर कहते हैं कि आपका बच्चा बहुत होशियार है, ही इज ओवर इंटेलिजेंट. एंड वो उसके जो क्वेश्चन है वो इतने ज्यादा इंटेलिजेंसी वाले क्वेश्चंस हैं, इतने डिफिकल्ट क्वेश्चंस हैं, उसके जो थॉट प्रोसेस है वो बहुत ही कमाल का है. तो हमारा स्कूल इसे पढ़ाने के लायक नहीं है, तो आप इसे किसी और बड़े स्कूल में एडमिट कराइए जिससे कि ये बच्चा फ्यूचर में और ग्रो कर सके. तो बच्चा काफी खुश हुआ और इस बात से उसने फिर पढ़ाई और जोर से करना शुरू करी, और उन्होंने ये भी लिखा कि या फिर आप इसे घर पे पढ़ाइए. तो उसकी मम्मी को लगा कि शायद उसे मुझे अपने साथ ही पढ़ाना चाहिए. तो उसकी मदर ने उसे पढ़ाना शुरू करा, उसे किसी स्कूल नहीं भेजा. धीरे धीरे करते करते एक दिन वो बच्चा बड़ा होकर साइंटिस्ट बना, और उनका नाम था थॉमस एडिसन, जिन्होंने लाइट बल्ब का इन्वेंशन किया. एंड जब उनकी मदर एक्सपायर हुई तो वो बहुत दुखी थे, और उन्होंने वो बैग निकाला जिसमें वो लेटर रखा था. और जब उन्होंने वो लेटर खोल के पढ़ा तो उसमें लिखा था, टीचर्स ने एक्चुअली ये लिख के दिया था कि आपका बच्चा बहुत ही बेवकूफ है, उसके जो क्वेश्चंस हैं बहुत ही इररेलेवेंट हैं, बहुत ही इलॉजिकल हैं, तो हम इसको नहीं पढ़ा सकते और शायद कोई भी स्कूल इसको नहीं पढ़ा सकता. आप इसको घर पे रखिए, ही इज गुड फॉर नथिंग. बट उसकी मदर ने उसको ये नहीं बोला, उन्होंने उसको बोला पॉजिटिव थिंग। उसे सुन के बच्चे को बहुत एनकरेजमेंट मिला कि सब लोग मेरा इतना प्रेज कर रहे हैं, मतलब मैं बहुत होशियार हूँ। एंड ड्यू टू दैट प्रेज और विद द हेल्प ऑफ द मदर, जिन्होंने उस पर इतने एफर्ट किए, he become a so popular scientist. And this is the power of being positive. अगर सपोज उसकी मदर ने उसे वो रियलिटी बोला होता कि स्कूल वाले कहते हैं तुम डफर हो, डम हो, इडियट हो, एटसेट्रा, सो यू आर यूजलेस फॉर एनीथिंग, सो माइट बी उनके दिमाग पर वो ऐसा इंप्रेशन आता दैट आई एम नॉट गुड फॉर एनीथिंग, सो माइट बी वो उतने बड़े साइंटिस्ट नहीं बन पाते, बट जस्ट बिकॉज ऑफ दैट पॉजिटिवनेस ही बिकम्स थॉमस एल्बा एडिसन. So he's the greatest scientist, a great scientist, and that story teaches us that how important is to being positive in your life. So जो भी लोग आपके पास हैं जो आपसे कहते हैं कि आपसे ये नहीं होगा, आपसे कोर्स नहीं होगा, अब टाइम नहीं बचा है, अटेम्प्ट स्किप कर दो, डू नॉट लिसन टू देम, जस्ट इग्नोर देम completely, because you only know what you can do. Nobody else is going to tell you what you can do or not. So just believe in yourself, be positive, just do hard work with a planning and strategy, and you would be able to clear anything in your life. So that was the story for today. Let's move on to the provisions. So second is income from property, asset or source of income in India. So any income which arises from any property, movable, immovable, tangible, intangible, would be deemed to accrue or arise in India. Higher charges or rent paid outside India for the use of machinery or buildings situated in India. These are the examples. You can go through with that. Then income through transfer of a capital asset. So that is going to be discussed in detail in capital gain chapter. That income from capital gain, etc. But for time being, capital gain arising from transfer of a capital asset. In general, we are talking about profit on sale of asset or loss on sale of asset. So if there is profit on sale of asset, that is going to be taxed in India if that capital asset is situated in India. What is the meaning of capital asset? What is the meaning of capital gain? That would be discussed in detail in capital gain chapter. Okay. Would be deemed to accrue or arise in India in all cases, irrespective of the fact whether the capital asset is movable or immovable, tangible or intangible. The place of registration, document, transfer, everything is irrelevant. If that capital asset is situated in India, then income would be taxed as income arise or earn in India. In case of salary income also, income which falls under the head salaries is deemed to accrue or rise in India. If it is earned means where you have done the work, where you are providing your salary services. Salary payable for services rendered in India would be treated as earned in India. Even if you are on a leave, suppose you are working in India and you are on leave for 4 months, and for that 4 months you have been paid. So you have gone outside India for a leave, and for those 4 months company is ready to pay you. So even at that time duration you are not in India, you are not working, but because that company which is paying you that amount is belongs to India, and that payment is of course succeeded and preceded by your services, so that leave period salary is also going to be deemed as arise from India. You can see that. Further, any income under the head salaries payable for the rest period or leave period, which is a paid leave period, which is preceded and succeeded by services rendered in India and forms part of service contract of employment, shall be regarded as income earned in India. For example, you are working in a company from April till August, you worked in that company. From September till November, like for 3 months, you went outside India on leave. And for these 3 months, company is ready to pay you the salary. Suppose the salary is 2 lakh rupees per month. So company is going to pay 6 lakh rupees also for that leave period on which you did not provide any service and you are outside India. and you came back from December and again joined the company and working. So any leave period which is both preceded and succeeded by the services. Preceded means this time duration and succeeded by after joining. So anything between that preceded and succeeded time is going to be treated as your leave salary. So even if it has been received outside India, even at that time you are not in India, you are outside India, you are not doing any work, still that would be treated as income earned in India. Salary, income from salary payable by government for service rendered outside India. So the provision says if you are the employee of central government and you are a citizen of India and you have been posted outside India, suppose in UK you have been posted. So you would be a non-resident, because if you are working in UK, then you are not frequently coming into India. So you would be a non-resident, but you are a citizen of India and the employee of government. So if you are a government employee who's working outside India, so technically where is the income is being earned? Outside India. Where the income is being received? Outside India. And you are what? A non-resident. So generally this salary which has been paid by government outside India for your work which is being carried out outside India, and you are a non-resident, so that would not be taxable as per the general provision, but we are discussing a special provision. So the provision says if the employer is the government, you are the citizen of India, and you are receiving salary outside India, earn outside India and non-resident, still that salary is going to be treated as deemed to arise from India. But there is a good news. There would be three components in that salary. One should be basic salary. Then we are having allowances. What are allowances, etc.? That is going to be discussed in salary chapter, and perquisites. So whatever salary, suppose the salary is 2 lakh rupees per month. So that does not mean the basic salary. The all components is including all three things would be your cost to company or package part. So out of this 2 lakh rupees, only basic salary component would be treated as your taxable income. All the allowances and perquisites which are received outside India is going to be exempted. You need not to pay tax on that. So technically you are a non-resident and income earned outside India, received outside India. So it should not be taxed. But the provision says if the payer is government, then we will assume that salary income as your income arises from India, because the income is going from the pocket of government. You can summarize that in all these cases, what we are gone through or going through, there is a common thing, there's a common intention. If the money is going from India directly or indirectly, we are going to treat it as deemed to arise in India if there is no direct connection. And you can see in this case, money is going from the government pocket. So of course, they are going to treat it as a income which is arise or deemed to arise from India. But the good news, only basic salary is going to be taxable. Allowances and perquisites are not going to be taxable in this case. So this is the exemption. Exemption under section 1017 says, however, allowances and perquisite paid or allowed outside India by government to an Indian citizen for service is exempt. So that means if out of the three components, if allowances and perquisites are exempted, that means only basic salary is going to be taxable. Okay. Now income from other source. If dividend paid, dividend or we can say interest paid by an Indian company outside India is deemed to accrue or arise in India and would be taxable in the hands of shareholder. So even if I am a non-resident, I lives outside India, but I purchase shares or debentures of any Indian company, and that Indian companies declaring dividend or providing interest on those shares and debentures, then those dividend or interest would be classified as deemed to arise in India, and that is going to be taxed also for a non-resident. So indirectly, of course, from where the income is generating, the income has been generating from India. So that's why this is also going to be treated as income, which is going to be classified as deemed to arise or India. Mrs. Keshaspuram Kumari saying, Kesapuram, sir, for non-resident allowances or purchases are taxable. No. Of course, that person who is working on behalf of government will become a non-resident because he's outside India, he's doing job like the person, those are working in embassies. Ambassador, so ambassadors are working for government outside India in other country. So they would be non-resident. But whatever amount of salary has been paid by government of India would be classified as deemed to arise in India. But out of that, only allowance and perquisite would be exempted. Balance is going to be taxable. Anubhav is asking, it is just a story or the reality? It is a real story, Anubhav. It's a reality. So if we are using a name of any scientist, like I have told you a story of Albert Einstein in the first session, that was also a true story. So these stories are actually the real stories, and you can see how some very simple thing can change the whole life. So being positive is a very, very important thing in your life, whether it's a personal life or being a professional life. Yes, Srihari, like ambassador posted abroad. Exactly correct. We are talking about those ambassadors. Now, the second point is royalty income or fees or interest income received from the following person deemed to arise in India. Let me show you this provision with the help of a diagram. So that would be really easy for all of you to understand. So we are talking about three things. Like first is, here is a non-resident, suppose Mr. A, who lives in USA. Now he is receiving, suppose, royalty income or interest income or fees. He is receiving all these income from India. But before that, we should understand why royalties need to be paid to him, because he must have been provided any kind of either lease to India or any kind of trademark, copyright, etc., for which he is charging this royalty. So, what is the background of receiving that royalty income? So, that must be he is providing any kind of lease, trademark, copyright, patent, etc. So, that's why he is receiving royalty income from India. So, if he is receiving interest income, that means he has provided some loan, etc. So that's why he's receiving interest income from India. And if he's receiving any fees, so that means he's providing any kind of services. So technically, because he must be provided these things to India, so that's why he's receiving these kind of income. Clear? Now the provision says, the question is this, whether these income would be treated as deemed to arise from India or not. So for identifying that, the provision has been made like this. It says, if the payer, the person who is paying, if the payer is government, suppose he has provided some kind of trademark, copyright or lease to the government, any kind of technology, etc. He provided the royalty, copyright, patent to the government of India. So now government is paying the royalty. So if the payment of royalty income or interest income or fees has been made by the government, then it will always be treated as deemed to arise in India. So if the payer is government, then this is going to be treated as deemed to arise from India. So that means all of these things going to be taxable for the purpose of non-resident, because if it has been treated as deemed to be received, that is going to be taxed for each and every category of person. Now, if the payment has been made by other than government, whether the payer is a resident of India, whether the payer is a non-resident in India. So if the payment has been made by any other person except government, then the concept says if that lease, trademark, loan, services, if that lease, trademark, loan or services, if used in India, suppose Mr. A took loan of rupees 50 lakh and that loan has been used in India for his business purpose, etc. So if that loan, or if Mr. B has taken any kind of services from that non-resident Mr. A and that services has been used in India. So if these lease, trademark, loan, services has been used in India, then any royalty income, interest or fees which has been paid by that payer would be treated as deemed to arise for non-resident and of course going to be taxable for him. So if any of these things, lease, loan, services, if that has been used in India, then any income which has been generated by that non-resident due to royalty, interest or fees is going to be treated as deemed arises from India, and that needs to be taxed in India. But if that is not used in India, suppose Mr. B has taken loan from Mr. A 50 lakh rupees for a business, but he used that loan for his business which is in Bangladesh or which is in any other country except India. So that 50 lakh of loan has not been used in India, or any kind of services he has taken, but that services has been utilized outside India, or any kind of trademark, copyright, patent, lease he has taken from Mr. A, but that has been used outside India. And even if it has been used outside India, so interest royalty needs to pay to Mr. A. So in that case, that interest, royalty or fees would not be treated as deemed to arise from India, because if that amount has been used outside India in any other country, then for that country, they will charge tax on that income. India will not treat that income as deemed to arise in India. Not deemed to arise in India. Maybe one question must be in your mind that what if it has been used proportionally? Suppose 50 lakh loan we have taken, out of that 50 lakh, 30 lakh rupees we have used in India and 20 lakh we have used in our business which is in Bangladesh. So only interest which is proportionate to that 30 lakh rupees would be treated as income deemed to arise from India and would be taxable for that non-resident of Mr. A, and he needs to pay tax on that proportionate interest. So if the payment has been made by government, all amount need to be treated as deemed to arise in India. If there is any other person, suppose Mr. B, etc., then we have to find it out whether these things has been used in India, then that royalty income, etc., would be treated as deemed to arise in India. If not used in India, then that royalty, interest, or fees, etc., would not be classified as income arises from India. Clear? So that was the point what we were discussing. You can see this. Royalty income, fees, interest income received from the following person deemed to rise in India: central state government, person resident, non-resident, if money borrowed, royalty or service, used in India. So if a non-resident A borrows money from a non-resident B and invests the same in shares of an Indian company, interest payable by A to B will not be deemed to accrue or arise in India. Next, what is the meaning of income deemed to received in India? So we have discussed what is the meaning of income deemed to arise or deemed to earn in India. Now, what is the income deemed to be received in India? That now we are going to discuss. Following incomes are deemed to received in India, even not actually received in India, and taxable in the hands of ORR, NOR, and NR. Annual accretion to the contribution to RPF, that is Recognized Provident Fund. So you won't be able to understand this concept until you will read salary chapter. So you would be able to understand this topic when you will go through with salary chapter. The second point is for deduction, the section 80 CCD. Again, that you will understand when you will go through with deduction topic under section 80 C-80 U. So there would be a provision of 80 CCD. When you will go through with this provision, you will understand why this is need to be treated as deemed to be received in India. In these four examples, only we would be able to understand point number 4. Now, third is TDS is deemed to be received in the hands of the payee. So that is going to be discussed in TDS chapter. So not to worry, you will understand all these 3 points in the respective chapter. Yes, income treated under section 68, 69A, B, C and 69D also, that was Hundi, is as deemed to be received in India. So these are all the cases of undisclosed income. So undisclosed income is going to be treated as deemed to be received in India in the previous year in which income tax fined that income. So all the undisclosed income would be automatically considered as deemed to be received when income tax, of course, knows about that income. So this point already we have discussed in basic concept. So that income would be treated as deemed to be received in India. Let's see if there's any query. Ishan is saying, sir, it can be used for any purpose in India. Yes, it can be used for any purpose in India, not any other case. So we can solve some questions. So you would understand these kind of question, or the provision would be more clear when we will go through with some illustration and question. So let's solve illustration number 5. This is illustration number 5 we are going to solve. Rishi Vyas, sir, money should be used or invested in India, or non-resident can take it into country where he reside. I do not get your question. Whether he is not able to take that money into his country or not does not matter. If that amount has been used in India, so any income which would be arise on that purpose is going to be treated as deemed to arise from the point of view of non-resident. So now we will go through with this question. From the following particulars of income furnished by Mr. Anirudh pertaining to year ended 31st March, compute the total income of assessment year 25-26. So I will ask you that what should be the treatment of this particular income in the hands of ORR, NOR, and NR. Okay. And because the question is asking that we have to tell that what should be the treatment of these kind of income. So we have gone through with the concept of tax incidence as per section 5, in which we have seen what kind of income is going to be taxed for different category of residential status person. So first one is short-term capital gain on sale of share of an Indian company received in Germany. So we have an income of 15,000, what we have earned on shares of an Indian company, but the amount has been received in Germany. So this 15,000 is going to be taxed for ORR, sorry, I should write down ROR, that is RNOR, and this is non-resident. So this 15,000 is going to be taxed for which category of person? Anushk is saying taxable for all, Shri Hari is saying taxable for all, Shri Rishi is saying all three, Vishal is saying NR, Ishan is saying all, Abhisha is saying three of them, Pooja is saying ROR, Rajiv is saying all. This kind of question we have discussed, this kind of case we have gone through with the provision. There was interest or dividend from Indian company. So any income, whether interest, dividend, or capital gain from Indian company shares or security is going to be treated as deemed to arise from India. And because this income is going to be treated as income arises from India, that means it's going to be taxed for all of them. So for ROR, it's going to be taxable, for RNOR, it's going to be taxable, and also for non-resident, it's going to be taxable. Well done. Now, second is dividend from a Japanese company received in Japan. So we have ROR, RNOR, and non-resident. So now we have dividend from Japanese company received in Japan. So you have to see, first of all, whether that income has been arise in India. If not, then you have to check whether this case has been included in deemed to arise in India case. And if no, then we have to see the other case also. So point number B, whether income is earned in India, the answer would be no. Whether it's received in India, the answer would be no. So if the answer is no, neither it has been arise in India, nor it has been received in India, then in which hand it is going to be taxed? This is going to be taxed, absolutely right, only in the hands of resident and ordinary resident. Let me tell you, all income is going to be taxed for him at least. If that is not a remittance case, or if that is not a case of earlier year or preceding year income. For resident and not ordinary resident, only three incomes are taxable: arise in India, received in India, and business control from India. Japanese company, so that means no control from India, not arise in India, not received in India, and also not taxable for non-resident. So this is going to be taxed only for resident and ordinary resident. Rent from property in London, deposit in a bank in London. So where is the property? In London. Where it has been received? London. Later on remitted to India through approved banking channel. Now you can see the remitted word has come into the picture. What we need to do? Just ignore this line. Remittance line is irrelevant. If you will not read even it, not going to read it, it doesn't make a difference. If you'll read it, you might going to do some treatment, which would make your answer wrong. Just skip that. Remittance provision does not affect our question. So the question is only this: rent from property in London, deposit in a bank in London. So technically, where is the property? Outside India. That means earn outside India. And where it has been received? Again, outside India. So in that case, if we'll see the taxability now for this question, that would be only 75,000 in resident and ordinary resident. Not for this, not for this. But in the solution, if you will see, that would be written 52,500 in place of 75,000. In the solution, it would be 52,500. Why? Because this is the income from house property. An income from house property provide 30% deduction. I understand You do not know this point right now because that would be in the later chapter. So for that purpose, I am telling you how we arrive at 52,500. So even if you tax 75,000, you are correct with your answer. But whenever you will go through with the income from house property chapter, then in future, you are going to tax 70% of it. So 30% is allowed as deduction, 70% is taxable only. So in the solution, they have taken 52,500. But we are just seeing the logic you understand or not. So this is your deemed to arise, but taxable would be less than that. So the taxability would be 52,500. Now the next is dividend from RP Limited, an Indian company. If dividend, interest, capital gain income from any Indian company security, what we need to do? Is it going to be taxed or not? Of course, it's going to be taxed for all because that is a case of deemed to arise in India. So 6,000 need to be taxed in all of them. So the remittance confusion was there when we were discussing the provision. That must have been cleared now. You know, you need not to do anything with the remittance or brought into India. So we need to ignore that point. Without that line, we have to solve with the help of other sentence what we have. So this is going to be taxed for each and everyone. Now, agricultural income from land in Gujarat. Now again, that is earned in India and in Gujarat only. So that need to be taxed, but agricultural income is exempt from tax. So if somebody asks whether this is arise in India, the answer would be yes. That of course that is arise in India because the income has been earned in Gujarat. But the question is we have to find out the taxable income. So it is arise in India, but that is exempt. As in case of house property, 30% is exempt. So we took 70% of it. In the case of agricultural income, 100% exempt. So we are not considering it because it is exempt. Understand? So we have the solution. You can see that solution, of course. So now tell me, when we were going through with the concept of incidence of tax with that table, what we were discussing about remittance and brought, and now we are solving a question. So whenever you solve practical question of any practical topic, after only solving those some numericals and after some practice, you will find that that was not that difficult what it was seen at the time of the provision. Understood? Okay, moving forward. Illustration number 6 we are going to discuss. You can see this house property case, 30% reduction has been mentioned over here. Okay, that you will understand when we will go with that chapter. So illustration number 6, Mr. David, an Indian citizen aged 40 years, a government employee serving in the Ministry of External Affairs, left India for the first time on 31st March 2024 due to his transfer to High Commission of Canada. He did not visit India any time during the previous year 24-25. So that means for the full year he was outside India, full 365 days. He has received the following income for the financial year 24-25. So you can see he is a government servant and he's a citizen of India. And what would be his status? His status would be non-resident because he does not visit India in the previous year. So he would be a non-resident. Now the question asks you to calculate his income, gross total income. So we have to see what is his income which could be treated taxable from the point of view of a non-resident. Salary computed. So we have seen that if you are a government employee and citizen of India and working outside India, then only basic salary is going to be taxed and everything else is going to be exempted because this is going to be treated as deemed to arise in India. So this 5 lakh is going to be taxed. Foreign allowances. So allowances are going to be exempted. All the allowances and perquisites are going to be exempted. Interest on fixed deposit from bank in India. So now from where we are getting interest? From Indian bank on the FDR. So that is again going to be taxable. Income from agricultural in Nepal. What do we need to do? Is it arise from India or is it received in India? He is a non-resident. So anything which would arise from India or received from India is only going to be taxed. And this is not arise, not received in India. So that is not going to be taxable. Income from house property in Nepal. Again, the property is in Nepal, not arise in India, not received in India. So that is again not going to be taxed in India. So only the income that is going to be considered as taxable in India would be 6 lakh rupees. You can see the solution, the 6 lakh rupees. Sir, why he is non-resident? Why previous preceding 24-25 were not considered for determining his residential status? Who is asking? Anoop Kumar. Anoop, in this question, we have to solve the question for financial year 24-25. That means assessment year 25-26. We are solving question. So we have to find out the residential status during previous year 24-25. He left India on 31st March 2024. So that means from 1st April 2024, he was not in India. And the question says he did not comes to visit India in the previous year. So he was outside India for full 365 days. To become a resident in India, you either have to come India for more than 182 days or that 60 days condition. And of course, he does not visit for even a single day in India. So that's why we cannot consider him as a resident. He would be a non-resident. Understand? Abhisha is saying, I found it confusing at first time. Now I get it totally. It's the basic rule of all numerical topic. Until you will practice some question, you will never understand the numerical topic clearly. And that is also a very universal provision. If you practice, you will find it out that it is very easy. So if I'll ask you to revise those provision tomorrow, it will not take much time. In most of you could even revise that all provision of residential status and incidence of tax. So whatever we have discussed in last two sessions, almost 5 hours we have taken, session 1 and session 2. And if I'll ask you to revise, so you may be able to revise all the provision in just 1 hour. Because now you have gone through with the numerical also, so you can reconnect the provision and you will understand them more easily. Okay. Dhanush is saying, sir, he is getting foreign allowance, not India. How it's exempt? Because that is the provision what we have discussed under section 1017. If you are a citizen of India working outside India and receive any allowance outside India, any allowance or perquisite outside India, that is going to be exempted for you. Bhumika is asking, residential status is not affected by citizenship? No. Citizenship is a different thing. Residential status depends upon number of days, how many number of days you reside in a country. What we have gone through with the last session. Yeah, citizenship will maybe transfer you into the special condition cases. So if you are not a citizen of India, not a person of Indian origin, then you have to check your registered status as per basic provision, general condition. But if you are citizenship or person of Indian origin, then you might need to check your residential status with the help of those special condition B1, B2, B3 and the deemed resident concept. Sir, why we will not deduct foreign allowances from salary? Because the point number 2 says foreign allowances not included in point number 1 above. If this point would not be there, then I would have taken the salary of rupees only for 1 lakh rupees. So question already says that foreign allowance not included in the above salary. So that 5 lakh is separate and 4 lakh is separate. Somebody is asking WhatsApp link. So I don't have that WhatsApp link. So you can mail to the BUS. They will provide you the WhatsApp link. Soumya is asking, sir, can you please again explain the example on page number 2.26? Soumya, we are on a YouTube. You can scroll back that and then you can find it out. The solution and what is the example on page number 2.26? We did not discuss any example on page number 2.26 over here. Okay. Or let me show you some test your knowledge question. So Mr. Ram, an Indian citizen, left India on 22nd September 2024 for the first time to work as an officer of a company in Germany. Determine the residential status of Ram for assessment year 2025 and 26. So students, we need to find out the status of Mr. Ram. First of all, as I have told you, the initial thing to solve a question, you have to see whether it does fall in general condition or the question falls in the special condition. So he's a citizen of India, left India for employment purpose. So is it a general condition or a special condition case? No, do not give me the answer. Just tell me, first of all, whether it's a general condition or a special condition. So because he's a citizen, he is leaving India for employment purpose. So that means he will fall in the special category of, as our case B, and point number 1. So he would be treated as a resident in India if he is in India for 182 days or more in previous year. So because he left India on 22nd of September, so tell me how many days he was in India. Days calculation must be accurate. Please remember this. Suppose if your days are coming 150 or the correct days are 152, so the answer would not change. But let me tell you, it would be, your marks would be deducted and might be you will not get any marks. So exact number of days should be there for solving these kind of question. You just need to calculate the number of days correctly. So how many days he was in India? And that should be the part of your solution also. Okay, somebody is saying 174 days. Rajiv is saying 159 days. Pooja is saying 175. Somebody is now saying 160. Ankush is saying 175. Pooja 175. Deepika is saying 195. How it's possible, Deepika? 191. 191 days. Are you calculating days from 22nd September till 31st of March? That time he was outside India. We have to take. He left India on 22nd of September. So we have to take days from 1st April till 22nd of September. You might considering from 22nd September till 31st March. We have to find how many days he's in India. And you are finding how many days he's outside India. Don't do that. Divya is saying 160, Anubhav 175, 191. Again, somebody, Vishal is calculating 191. Divya is saying he's a resident. Ram 175, 236 days. Rihan, what are you doing? Smriti 175, Aman is 161. So the correct answer is 175. We have to find out the days, how many days he was in India. So April, he was in India, 30 days. May 31, June 30 days, July 31, August 31, and September 22nd. The day of departure would be considered as in India. That would be 175 days. And because he falls under the special condition, so that is less than 182 days. So he would be considered as non-resident. The correct answer would be non-resident in India. I hope it's clear now. The problem session would be on day after tomorrow. You can ask your query if you have any query, and I guess Dimple ma'am will take your 5 minutes time.
Yes, sir. I am here, sir.
Ma'am, please proceed.
Yes, sir. Yeah. Hello, students. Thank you, sir, for this wonderful session. Students, till now we have completed 2 chapters. Chapter 1, your basic concepts, and Chapter 2, residential status. If you see these 2 chapters, these are the fundamentals of your income tax law. Because in the first chapter, you have understood the rates which are applicable. First of all, you have understood what is tax, why it is levied, why it is so essential for the government to collect the tax from the taxpayers. Then what are the steps that are involved in computing the total income, tax liability, what are the 2 regimes which the individual has, the default tax regime, which one is the default tax regime, and one is the optional tax regime, which is your normal provisions of that. Then you must have understood that tax rates, different tax rate, because liability is different under section 15 BAC, then tax rate is different under your normal provisions of the act. Then there is a surcharge threshold also, that if the total income of an assessee increase beyond the certain threshold limit, then you have to apply the surcharge. Then your HEC rebate, what is rebate, why rebate is given, what are the conditions to be fulfilled to get the rebate by the individual. All these things you must have understood in chapter 1. Now, when I talk about chapter 2 is the first step to determine the total income of an assessee. Why so? Because if you have not determined the residential status correctly, then your whole total income will go wrong. If you see in the forthcoming session, you understood that for TDS purpose also, for deductions also, for your chargeability, then everything that will undergo a change if you didn't determine the residential status of an assessee correctly. So these 2 chapters are very, very important and the fundamentals. If the section-wise weightage is already hosted on the website, if you see these 2 chapters, which are the basics chapters, they have given the weightage of 10 to 20%. It means your 5 to 10 marks will be from these 2 chapters. But apart from that also, it is essential, the residential status, your surcharge, your tax rate, everything. If your full-fledged computation question is there, if you calculate the tax according to the slab rates wrongly, or didn't add the surcharge, or forget to do that, didn't apply the marginal relief provision or rebate provision, or wrongly calculate the residential status, your whole computation will go wrong. So just understand how much these 2 chapters are very, very important. So for this regard, we have a 1 extra session for the day after tomorrow, because sir has already said that will be your problem solving session. And in this session, your all the queries, all the problems related to these 2 chapters will be taken up by sir, and he will ask your questions from you also, so that your revision can be there for these 2 chapters. So before that, students, kindly prepare very well for these 2 chapters. You have 1 day. Just revise what has sir told you, that understand the provision, and just use that option which we have given, that opportunity we have given to interact with sir and interact with them and clear your all the doubts. The timing will be same, student. It will be like your LVC 6 to 8:30 in the evening. In the LVC schedule, we have put an extra problem solving session. In the forthcoming session also, we will put an extra session in which the problem solving only will be there. The topic which is already covered till that would be taken up in that session only, just to resolve your query, just for practice, just for revision, and for that only. So kindly take the benefit of that session, students, and just be prepared for that. So I guess, students, WhatsApp link will be shared with, I'll share the WhatsApp link with you in the next session, because we have a WhatsApp group separately for the students, for the LVC students. I will share that with you in the next session. So thank you, sir. I guess we can conclude the session now, and we will be meeting with sir for for the next session.
Thank you.
Thank you, students.
Yes, complete session.